So are you hesitant to invest during a market correction? Well, you're not alone, okay? So I just want to share with you, there are some solid strategies and solid investment that you can implement today, okay, to make sure that your portfolio gonna keep growing over the next few years. So the first thing, you need to understand what is a market correction, okay? And you need to understand if we are in market correction. So first, a correction is if you're talking about the stock market, a correction, the definition is if a market goes down by less than 20%. And that's the nature of the market, right? The real estate, the stock markets go up or down, okay? Again, the real estate usually they're looking by the US national market, but also there are about 400 metro areas. Some go up, some goes down, some already very close to the 20% mark. And if a market goes down by more than 20%, it's called a crash. So like happened in 2008. Okay, so we had lots of corrections during the last 15 years since the 2008, the market crash. But in my opinion, we are going now to the market crash. Again, in real estate, it's very hard to see that because it's going very, very slow. Okay, there are many things happening underneath the surface, and only people that are walking in and out in the real estate industry, they may have a feeling that it's going to happen really, really soon. So the second point is like traditional techniques that you should implement in your portfolio, okay, if you want to be very conservative, okay, so at least to maintain what you have or to have a small growth on your portfolio, okay. The first thing is like bond, cash, gold, okay. So again, cash is good to have, okay. Of course, you're gonna hit by inflation, okay. But you may be ready to understand. It's very hard to time the market, okay. But you may have some access to cash to know, okay, there is something is at change, okay. So now we are going an upward market. Usually, upward market gonna go for quite a few years. So it's good to be on cash. That's the first option. Buy short-term bonds, okay, you may get, or CDs, or get 3 or 4%, okay, but you have the security, okay, like going just on real estate, commercial deals, stock market, that's going crazy, okay. I like to do lending, okay. It's a private lending, okay, so I'm locking in my rate in advance, and I don't really care if the market goes up or down, because my asset, okay, that I'm lending against, okay, is like maybe 50% more worth more, okay, than my loan. So I'm protected. It doesn't matter if the asset value gonna go down by 10 or 15 or 20%, which is very rare, but it's possible, right? But still, my principal protected, okay, and I can keep getting my cash flow. So the third thing is like asset allocation, right? So again, depends what you have done in the past, okay? So if you think we are in a market correction, and again, it's very hard to understand if in a market correction, okay? Because the time frame in a correction in the stock market or the time frame in the real estate market is completely different, okay? Like in 2008, okay? Like between the peak and the trough, it was like 18 months, okay? But in the real estate market, it was like about 5 years. So from 2008 to 2012 or 2013 until the market reached its bottom, okay? So in real estate, in my opinion, you have more time to adjust and to change, your portfolio and to react to what's going on. So again, if you're in a few positions, okay, that you think that may not perform over the next few years because of what's going to happen in the market. So again, the first thing you can say, listen, I'm going to stay in those assets, and I can take some loss. I'm happy to wait. That's fine, okay. But if some assets you generate some negative cash flow, and maybe the asset value going to go down, so you may need to take a hit, okay. Liquidate this money, and you need to put it in a different position. So again, you may have some few positions that may perform over the long term, which is good, okay, but you need to play around with other assets, okay, so that's just going to give you some stability against the other assets. So last point is risk, okay, and there are two types of risk: your risk, okay, and the risk of the investment vehicle. So the most important thing is your risk, okay, and your risk gonna change, okay, with the market, okay, because some people can, absorb the risk or absorb the emotion roller coaster during a market correction or a market crash, okay. For me, it's very hard. For me, to see the markets goes down. Doesn't matter if it's real estate or stock market, and you're gonna say, okay, it's gonna be okay. It's gonna go up in value. I don't know. What's gonna happen if I need my money soon, to cover something else? Okay, so it's very hard to know. It's very hard to know, because when the market is crashing, if it's real estate, also maybe your tenant may lose their job, okay? And, or maybe the property management also, they're gonna suffer from, cash flow issues, so maybe some cut corners, so it's gonna affect your property, okay? So maybe you're gonna do less inspection, or maybe not gonna do a proper inspection like they should have. So again, you need to adjust your risk level with the market. And again, this goes back to the same thing. So again, you need to be more conservative with your business decisions. And then, in my opinion, you need, when you feel there is a market correction, okay, you need to take some of your portfolio and shift it towards something that's a bit more allow you to live your lifestyle comfortably and avoid these sleepless nights, okay, over the next few years, because nobody gonna knows what's going to happen with this market. So again, as I mentioned before, I like lending. It's give you a fixed yield, and that's pretty easy, and I can sleep like almost like a baby at night. Okay. The next video you should watch is, should you pay someone to manage your portfolio? And it's very related to what we just shared today. Okay, maybe you used to do it by yourself over the last years because the market was good, but when the market is not that good, maybe you should consider to work with someone else. Okay, so you should be certain that your portfolio gonna keep increase over the next recession. See you in the next video. Bye bye.